Hi, folks. Brian Oswald here. Welcome to the webinar. It's good to see everyone. We're going to wait a few more minutes here until I get started to make sure everyone has an opportunity to join. So, looks like a good crew today. So, thank you. Hi, Tim. Danny, thanks for joining. Hi, Connie. Bob, how's it going, Bob? Hi, Jane. Carolyn, thanks for joining. Tom, hey, Tom, good to see you, Tom. Very good. Wow, full crew. So, thank you, everyone. I know everyone's busy, so I do appreciate you taking the time. We're real excited today to visit about the Safe Money webinar, which has been really, really popular. So thank you guys and gals. Very good. Looks good. Perfect. Sean is in the webinar. Hey, Sean. All right, folks. Well, for the sake of time, let's go ahead and get started. My name is Brian Oswald. Welcome to the webinar. I'm excited to present the Safe Money webinar today, and I appreciate everyone joining. I know everyone's busy, so thanks for taking the time. We do appreciate it. So real quick, let's go through some disclosures. If you could read up real quick. Thank you, everyone. Good, good. So when I was a child, back in high school, I always admired the high schoolers in my town, right? You'd see them at football games or driving around or cruising the town, right? And they always had their Letterman jackets. Think about those Letterman jackets. They were so cool. Everyone wanted one, right? With a big giant letter on the front and your name on the back. I loved everything about the jackets, the sleeves, how they were different color, right? And the smell of the leather, right? Think about that. And I always told myself when I grow up, I want to be just like them and have my own Letterman jacket. Did any of you have a Letterman jacket? Right? And when was the last time you wore it? Might have been a few years ago, right? Just like me. And despite the love of my Letterman jacket, I don't wear it anymore, right? I haven't seen it in years, right? It's been a long time, hasn't it? Okay. So there's always a time and a place for things in life. And this can be the same for you sitting on cash. A lot of us have heard the phrase, cash is king, right? And having some of our cash sitting in the sidelines, we call it, or an emergency fund is crucial for liquidity, right? It's very, very crucial. But unfortunately, the earning potential is very minimal. As a lot of you know, savings, CDs, even money markets, they're just not paying anymore, are they? And they haven't been good for a long time. In fact, January of 22, a CD, a 1-year CD was paying a mere 0.15%, right? 0.15%, which is a far cry here from the high tens back in the 80s. If you look at the chart, right, those were the good old days. A 12% CD, wouldn't that be nice? So having assets that are not working for you is about as useful as having your Letterman jacket sitting in the closet collecting dust, right? If your money is sitting in a savings account or a CD or even invested in bonds, it's just not working for you like it could be. And we have a lot of clients almost every day that come in who are sitting on a large portion of cash, right? And when I ask them why, they always tell me the decision is almost too overwhelming. They don't know what to do, right? So guess what? They just leave their cash sitting in the savings account. Okay. So today we're going to talk about an alternate feature, alternate product where we have the safety, we have the growth, but we also have the protection, which is huge for a lot of people today. Okay. So let's take a look. So with the new feature, It's a fixed indexed universal life insurance policy that we're very, very excited to talk about. It has several liquidity features, right? Access, accessibility, but also a significant earning potential with guaranteed principal. And I do love this. It has some living benefits with a strong death benefit component, okay, which kind of gets you the best of both worlds. So let's talk about some of these benefits because there are a lot of benefits that we want to cover. So, number one, the product's going to have some great growth opportunities with a safety net. Okay. It has a guaranteed minimum rate of return, which upon the 10th policy anniversary or surrender of the policy, it's going to allow an earnings floor, which offers a much higher rate of return than any type of CD or money market or even savings account. It's going to provide protection for your family, your business, and yourself with a strong tax-free death benefit component. It's also going to include some riders in the event of a chronic illness or terminal illness or a long-term care scare. It's going to have great liquidity and early cash value accumulation. By tying these policies to an index rather directly into the stock market, the Legacy Excel offers a worthwhile alternative to higher risk options. You will earn interest based on the performance of an index, which could include the S&P 500 price return or the S&P Mark V excess return index, which are both strong players in tested performance for accumulation. Lastly, in most instances, there's no medical exams, right? No physicals, no phone interviews, no delay. It's simple. This is a hassle-free option where there's a quick Q&A to help determine your eligibility. And sometimes we can get approval in a few minutes, right? Amazing. Simply put, the Legacy Excel is going to provide dual components of a death benefit while also offering tax advantage cash accumulation opportunities, right? This is what we call the Swiss Army knife, right? There's so many features which we may or may not need, but it sure is nice to have. Now, I know what you're thinking is, Brian, I don't need life insurance, right? I don't need it. Well, hold on a few minutes. Just bear with me while I ask you a question. Do you remember back in the day before cell phones were introduced, right? We had the house phone, we called it, that was hanging on the wall with that great big long cord, right? So we could travel from room to room and still talk on the phone. Or some of us may have had the fancy cordless phones, right? Weren't those nice? So what did we do with the phone? You made phone calls, right? It was simple. So back then, you needed separate devices for certain tasks. For example, we had to own an alarm clock. We had to own a calculator, right? A camcorder. Remember those? And a camera. So we had to own all those different products. Today, our phones, if you think about it, can do all of those tasks, right? They can make a phone call. They can video record. They can do your calculations. They can do pictures and much, much more. So financial strategies, techniques, products, and tools, they all have evolved as well. Remember back when there were only mutual funds, right? Now we have ETFs or exchange traded funds. We have spider funds. We have REITs, right? And annuities. Annuities used to only be used for income. Now there's over 1,200 different type of annuities, 1,200. Some are for growth. Some annuities are made strictly for income. Some are made for home health care benefits. Some have other riders, right? So times have changed. Now, while we used to purchase life insurance strictly for the death benefit, today's life insurance now offers all kinds of additional benefits for when we're alive, not just when we're gone, right? We call these living benefits. So life insurance now typically don't require you make monthly premium payments like we used to. Instead, we place lump sums of money into these policies and use them as an asset class. Much, much different than 5, 10, or even 15 years ago. Okay. With the Legacy Excel, as long as you have sufficient money in the account value to cover the cost of insurance and expenses or any policy loans, you don't have to make premium payments, right? Just like everything, life insurance has evolved. And people really today, they want options. And that's what we're here to help them with. Okay, so let's take a look. So here's an example. Stacy, who's a 65-year-old female with a good amount of investments and annuities. Okay. She has plenty of money in the market. She has plenty of money in annuities. And really, she doesn't want any more of her money placed in either one of those options. She has about $100,000 just really sitting in cash right now. And she's looking for something that's going to give her some growth opportunity versus that CD or savings account. She doesn't want any market risk, but she would like to have that money go to her heirs or loved ones should something happen to her in the least amount of taxes as possible. So using this $100,000, we fund a Legacy Excel IUL policy, okay? And Stacy gets standard non-tobacco rates. So what does this mean? First off, she has a guaranteed death benefit of $171,000 for her loved ones should she pass away. But folks, really that's just the equivalent of looking at this solution as just a phone, remember? Remember, life insurance has evolved and become so much more. So let's look at some of the other benefits that Stacy will see by using this strategy. First, this is going to offer her enhanced liquidity through early cash value loans or penalty-free withdrawals. Should she change her mind later and decide to cash out the policy, the waiver of surrender will allow her full access to the account value. She will also have growth potential using the index product. As the index grows, then so does her account value. Okay. So all the growth in the account is tax deferred. Again, with life insurance, if something happens to her, then her beneficiaries will receive the $100,000 tax-free with no penalty whatsoever. The Legacy Excel is also going to offer her an accelerated payment option, which what this means is should Stacy need some sort of long-term care or in-home care or nursing home, then she will have access to the death benefit, which is called a living benefit for these expenses. Now, as you folks know, long-term care is getting very, very expensive, and it can deplete your nest egg really quick. So what this accelerated death benefit will allow her to do is take out that death benefit early should she need it, right? It's kind of like the Swiss Army knife, like we talked about. Just so many features that she'll have access to. Now, I want to point out, since we're talking about life insurance, there's a few things to keep in mind. Number one, you must be able to qualify medically and financially for the coverage. There are costs of insurance and other fees. The older you are, the higher they get. And they will also impact the cash accumulation. When taking out any type of loans or withdrawals, be aware that that will reduce the death benefit. And if you're not careful, it could cause the policy to lapse. When placing a single premium into an IUL policy, as discussed in this presentation, the IUL would be considered a MEC. And in a nutshell, that means the cash value is growing tax deferred. However, any type of loans or withdrawals taken from the policy will be treated as taxable income. Okay. So folks, the Legacy Excel may not be a solution for everyone, but for the right couple or the right people that are looking for, number one, growth, protection of principal, accessibility to their money should they need it, leaving a legacy to their loved ones, or lastly, building a buffer of protection for possible healthcare events like long-term care or nursing home or in-home care. If any of those above features appeal to you, then this product, guess what? Has it all. It has growth, it has protection, it has accessibility, it has that legacy feature, and also that long-term care feature. So again, the Swiss Army knife. So as we wrap up, if you folks want to visit one-on-one or talk more about this strategy, please call the office today and schedule a one-on-one with me to visit and make sure this will fit your financial needs. Please call the office at 402-904-7924, and Heidi will set up a time for us to visit. Again, the office 402-904-7924. So I want to say thanks again. Thank you for taking the time to join. I know everyone's busy, and I do appreciate the time. So everyone, be safe and stay healthy. Hope to see you all soon. Thanks again.